Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Thursday, October the 29th, 2015. And I'm very pleased to be speaking with Derek Iwanaki, who is the Vice President of Investor Relations for First Mining Finance Corporation. And you may remember I interviewed the president, Patrick Donnelly, a couple of months ago about First Mining, and we want to follow up with that. We're here at the New Orleans Investment Conference, and Derek has just given a great presentation on the properties that the company has acquired over the past few months, and laid out some of their plans of some of their go forward actions. And we just wanted to bring that to you guys, and we're going to get into a couple other things. But how are you doing today, Derek?
Very fine, thanks. That's only my second presentation since starting with the company, so I was a little bit nervous, but got that over with, and yeah, feeling pretty good.
No, you did a great job. I mean, it was really well done, and the question session afterwards, I thought you did a great job, and because some of the questions that were thrown at you were pretty tough, and
I knew I was going to regret inviting Mickey Fulp to the presentation, but that's okay. He brought up some good concerns.
Well, I didn't want to name names.
Hopefully, I addressed them. Yeah.
Yeah. I didn't want to name names, but he was kind of laying into you. But yep. Like I said, you did a great job, and just as a reminder to you guys, First Mining, what they're doing is First Mining Finance is they're acquiring properties. That they're acquiring mines that are distressed. They're considering shutting down. They're not in production at this point, but they have metal in the ground. They know that they've got silver. They know that they've got gold, and it's just a question of getting it out of the ground before all of their money evaporates. And that's where First Mining Finance comes in, and they actually acquire the companies and then hold them. And it's kind of like you and I were talking before, in the way that I was describing it, it's kind of like a house flipper for people to kind of understand. But you're not doing any of the remodeling. You're not doing any of the work, because all of that work has already been done. You know that the gold is there. You know that the silver is there. It's just a question of how do we get the capital to get it to the next stage. Is that about right?
Well, that's a pretty fair assessment.
Okay. And as far as we know that Keith Neumeyer has over the past few months or a few months ago, he had asked for the primary silver miners to withhold some of their production. Mm-hmm. None of these mining operations that you have currently, they can't do that, can they?
Well, the mines that we're buying actually aren't in production, so we don't.
They're not in production at all.
Yeah.
So there's nothing at all coming out of the ground. No. So, okay, and just give us an idea of where First Mining is headed right now and what you're doing.
So, for the short term, anyways, say within the next year, the goal is to get up to 10 million ounces of gold in the mineral bank. So that's ounces in the ground. We're just going to hold on to them. They're nice and safe underground, so you don't have to worry about holding them in a real vault. And then we want to get up to eventually 30 to 50 assets. So okay. Right now we're going to be at 21 once these acquisitions close in November. And we hopefully, over the next year or two, we'd like to get up to 30, possibly even 50 assets.
Now, do you guys have any kind of timeline as far as how you're assessing the market? We know that these are distressed properties. We know, everybody knows that the mining industry has just been beat to snot. I mean, there's no money out there for it. So it's what you guys are doing is filling a void, a much needed void, because we're going to have production in the future. I mean, it's no secret that the gold and silver that's currently out of the ground that's in the retail market is evaporating. Mm-hmm. It's going away. So in order for that to be filled in the future, there's going to have to be mining operations. That's where you guys come in, right? And what is some of your analysis telling you as far as the properties that you're acquiring,
Mm-hmm.
and what kind of timelines are you guys looking at as far as, or is that even a fair question as far as where you see it going, and how long do you see that transpiring?
Well, we think that we are probably at or very close to the bottom of the market, but the market could keep on dragging on, and we want to keep on acquiring projects. So we are trying to get up to 10 million ounces in the short to mid-term, 10 million ounces of gold or gold equivalent.
Okay.
From there, we might start to delve into some other assets. We might look into copper, zinc, lead, platinum or palladium. If we can acquire those assets at reasonable prices, we want to start acquiring those as well, so we can diversify ourselves and eventually be like a kind of like an ETF for mining companies, and
Okay.
somebody kind of like the private equity for the little guys, so to speak. And so over the next few years, that's kind of where we see ourselves evolving into, and eventually. We do want to have revenue generation coming out of some of these assets. So it might take more than a few years, but say 5 to 10 years down the road is where we would see ourselves actually starting to either get into these third-party agreements, start to generate revenue with either royalties or metal streams or a joint venture or earnings. So that's where we see ourselves going.
During your presentation, you had talked about you guys are only interested in acquiring properties that are in relatively safe neighborhoods like Canada, United States, and Mexico, basically the Western Hemisphere.
Yes.
And how do you see, or do you see, any of the geopolitical scenarios that are going on elsewhere in the world? How do you see that impacting what you guys are doing or the market as a whole?
For us, we're not going to go into those jurisdictions where we're not wanted. So we're not heading down to Bolivia anytime soon. Probably not going to go to Brazil anytime soon. We do like some areas. Well, Mexico we do like. Chile we do like. Chile has a couple issues though. Water is becoming an issue, and it is on a seismic area. So there are earthquakes down there, and that's where some of the largest copper mines in the world are producing. So they're seeing some issues down there. So we're going to try to stick to the Western Hemisphere, but going down to South America, yes, Chile, Peru, Colombia. We'll see about Argentina. We'll see how the votes pan out, but yeah, we might go down to Argentina as well.
So you don't really see, as far as what's going on in the Middle East or in Europe or Eastern Europe, Russia, China, you don't see any impact coming to the mining industry from any of what's going on there?
Not from a geopolitical standpoint, but from a demand standpoint, for sure. China is one of the biggest consumers of pretty much all metals, almost any input, period. So yes. We are very dependent on what happens to China. So if China slows down, and they have, that's exactly part of the reason why the metal prices have come down where they are. But from my understanding, Russia is going to continue, or sorry, China is going to continue to grow. India is going to continue to grow.
Yes.
They want to have the Western lifestyle that we enjoy here. And so it's inevitable that they're going to move towards that direction, and they're going to have to consume metals to produce all these items that they want.
Well, China and India both have these massive solar programs that they've embarked upon. China's about a year and a half to 2 years into their program, and they're supposed to have 100 gigawatts online or more, a minimum, by 2020. I mean, that's less than 5 years away.
Yeah, I don't know if that's even feasible. I used to work for a uranium mining company, and so we were producing the fuel potentially for nuclear reactors in China. And I know that their goal there was to increase their fleet from around 27 operating reactors, somewhere up to around 100 over the next 10 years. So that's where you can see huge power generation is from nuclear power. When you talk about solar panels, that you're talking about millions of acres to cover that type of ground that's going to be required to generate that type of
They're
electricity.
talking about on rooftops. They're talking about
Mm.
taking it to the people, and India as well.
Yep.
That's where a lot of it is planned. We've got it there. I've got a contact named Jeff Brown in Beijing, and he is very well. He does a lot of research. He's an American citizen. He's now living. He's been in China. He's been in Beijing for almost 10 years. So he understands what's happening, and this is information that's coming from him. He's done a lot of research on these programs. He's not as much on the India program as China, but it's going to be rooftop. I mean, so they're not doing
Germany
farms.
is doing that already.
Yeah, they are doing it. I mean, so I see that impacting the mining industry here. It's going to have to. I mean, it's going to, because one of my favorite questions, Derek, is where is it coming from when you've got mines in distress, you've got mines that are closing. These are operational mines. Your company is the pipeline to backfill those mines that are closing or that are just played out. I mean, they're either shutting down because they're not profitable or they're played out. Yep. And that's going on globally.
Oh, yeah. Mining operations today, unlike, say, 10 or 20 years ago, today most of them are unhedged. They're jacked up on debt, and they're starting to mine out lower grade things. The low-hanging fruit is all gone now.
All gone.
You have to go to the remote areas, which is why they're going out into Siberia, which is why they're going out to Nunavut or Alaska. Tough areas to operate in, Africa. You're going in all these exotic areas where it's very difficult to produce this stuff, and and
then once you produce it, you got to get it to market.
Exactly.
Without something happening from the point you get it out of the ground to the refiner.
Correct.
I mean,
so it's becoming difficult. The supply is going to have to drop at some point. And what they always say is for the best cure for a low price is low price. And eventually it's going to have to turn around. When mines start shutting down and people keep on demanding their iPhones, their computers,
TVs,
that metal has to come from somewhere. Yes.
I mean,
the list goes on.
The list goes on. I mean, it's just incredible. So once again, currently, is what I'm looking at. Where is it coming from? I mean, because you see it, you have to see it, because that's otherwise First Mining finance wouldn't exist.
Yeah. Right now, I know a lot of the metals come from secondary supplies. So you're either crushing cars, you're getting rid of tin cans, you're recycling these metals. But a lot of that is still going to waste, and eventually it gets put into some machine that's sitting on top of the earth for decades. So that metal is going to have to replace from something else, and so you have to eventually pump up the mining operation. And right now, there's barely no drilling going on.
Right.
Exploration is virtually nil, and so at some point there's going to be a supply crunch. If nobody's replacing the ounces that are being produced, if nobody's replacing the pounds that are being produced in the base metal sector. At some point, if they keep on kicking this can down the road, at some point there's going to be a crunch. And where is that metal going to come from? Well, we're going to be holding on to it.
But if we'll say you get to the 30 companies that you're looking to, 30 companies aren't going to supply the world.
No.
I mean,
we can't save the world, but we'll do our best.
But that's my point. I mean, is that something has to give.
Yes,
something has to give. The low hanging fruit is gone. All of the operations that are out there right now, because the prices have been suppressed for 4+ years. Now, all of the high grade is all gone. So now they're as you just pointed out, they're going to the lower grade,
deeper mines,
deeper,
higher grade.
Everything is just worse and worse and worse,
and the costs just keep going up.
Yes. So I mean, and I understand, and I do appreciate and respect the low prices is the cure for low prices. when are we going to see it break? I know you don't have a crystal ball,
Yeah.
and I'm not asking for that.
I wish I did. But for us, I mean, we would like this to last for at least another year, possibly two. And then we'd like to see things probably start to turn around. I mean, we don't want to keep on having an endless supply. So you do eventually want to see it stop. I mean, that question came up, I think, numerous times, was how do you stop the dilution in your company? And so for us, I mean, we do want to get a very large warehouse of product or assets, but yeah, at some point you need to stop and start selling some of those assets. So
Yes.
we don't want it to last forever. And so, yeah, we see probably 2-3 years before things start to turn around. And but when it turns around very quickly sometimes. And so if that's the case, you know, we're going to be in a good position.
Do you see it as a lot of people have said that it's going to be, you know, rather explosive to the upside? I mean, is that what your analysis is saying?
Historically, yeah, and that's what happens. Is I showed a chart today, and you can see those spikes can be very drastic on the upside and on the downside.
Yes.
And so if you see some big mines shut down, and you could see a really big spike in the metal prices.
Okay. Well, that's what we're looking for.
Mm-hmm.
That's what I'm looking for. That's what you're looking for. That's what we're all looking for. But you just don't want it to happen right now.
Not just yet. Not tomorrow, not next week, not next month. You know, maybe next year, but maybe at the end of next year.
Well, see, and the thing is that you guys out there that are listening to this, you need to take a cue from Derek, because as they are acquiring more assets, we need to be acquiring more assets as well, so that we are, you know, in a great position when things do turn around. They're going to have to. Nature says that. I mean, it's just, we just don't know when. But
exactly.
It will happen.
Yeah, there's no if, it's when.
Yes, it's not a question of if. But we've been speaking with Derek Iwanaki. Is that right?
Iwanaki. Iwanaki is pretty close.
I apologize.
No problem.
And he is the Vice President of Investor Relations with First Mining Finance. And Derek, we certainly appreciate it. Appreciate all your time, and we'll do this again real soon.
Thank you very much, Rory. Thanks for having me.
Thank you.